Well, hello everyone, Scott here, and today we're going to briefly discuss how to analyze a self-storage facility and its market. You know, it's no surprise that the reality of the economy is that, a handful of folks are truly making a killing out there. However, the statistics show that 94% of all real estate investors, let alone small business owners, will fail within 5 years. That's why most people are sitting on the sideline right now. And why is that? It's because of fear. For a number of reasons. However, folks, we're going to try to turn that around right now and show you why you should be investing in this market right now, and especially in self-storage. All you need to do is look out on the internet, and if you're reading any type of magazines on investing or in commercial real estate, you'll see nothing but positive press about self-storage. Bloomberg is the most recent that I just pulled off. Best U.S. real estate market, self-storage units. And again, go out there and you'll find just all kinds of articles on how the sector has been doing. So folks, if you're looking for a sign, this and all the other articles, as well as all the market information out there, is reason enough why you should be getting into this business. And we have an awful lot of folks that are looking into the business, and they're coming to our website, and a lot of our students have questions about, well, how do I go about analyzing these things, because it's a little different animal. It's not what I'm used to. And, I'm not familiar with the industry lingo, the terms. I'm afraid I'll kill the deal because I don't know what to say on the phone to a seller or broker. And so that's what paralyzes people before they even get off the ground. They can't pick up that 800-pound phone and call the seller or the broker because they're afraid that they're going to kill the deal just because of what they don't know. Well, I was in that same position. I get it. Several years ago when I began investing in self-storage, and so I created a cheat sheet. And now that it's kind of morphed into, our self-storage evaluator software that we use on a regular basis now. But it's got a page on that essentially is our cheat sheet. It's a script that allows us to talk to the sellers or the brokers and basically just ask the questions to get the information that we need to know to analyze a self-storage facility. So there's nothing you need to worry about. You just have the software or the script in front of you, and you ask the seller or the broker, well, tell me a little bit about the facility. And after they fill in most of the gaps, then you can fill in the blanks by how many buildings. I didn't catch how many buildings you had. What is the net rentable square foot? Property acreage, the year that it was built in phase 1, driveway surface, perimeter fencing, access control gates, security cameras, major amenities. Any of the information that you need to know to make kind of a quick analysis and a quick assessment of a facility and to determine whether it's something you want to pursue or not. Fear number 2 that we hear from most of our students and most beginning self-storage investors is, I don't know what I don't know. And so once you get some of that information, well, what does that mean? Well, once we've gotten a little further into a deal and we've gotten some of the income and expenses, that's truly what we're buying here is an income stream when we're buying a self-storage facility. So when we're analyzing it, the most important factor that we're looking at is, what is the cap rate? What's the net operating income? And we need to find that out by finding out all of the income and all of the expenses to derive a net operating income from the facility. And then we can begin to look at our cash-on-cash return. Once we add our debt service or our loans in, what does the deal look like after that? So again, a little further in to the deal, we have a more detailed look at the profit and loss statement, the income and expenses, so that we can further assess whether this is something they want to pursue or not. Okay, so fear number 3, talking about the numbers, that may have been a little scary sheet for some of you. Real estate is finance, and those charts, graphs, stats, and reams and numbers just confuse me. We spend a lot of time at our self-storage academies doing this exact exercise, underwriting and analyzing self-storage facilities. I wish I'd have to pay someone each time I evaluate an opportunity to tell me if it's a good deal or not. There are some folks that just don't feel comfortable doing it on their own, and so they'll pay folks, and they'll even pay our company to analyze deals for them. Well, you don't necessarily have to, because within the software, the self-storage evaluator that we offer and that we've been using and our students are using, you can use the tab which is called a quick estimator. So even if you're finding facilities out there, you've just found it on a website, or you've got a real basic sheet from a seller of income and expenses or a broker, you can plug it in, and as long as you've got the gross potential rental income, what the vacancy is or the occupancy, the income it's bringing in, as well as the expenses to determine a net operating income, well, then it'll apply and automatically tell you what the cap rate is on the deal at the price that the seller or the broker has listed for the property. And then you can take it a couple of steps further and just hit copy, and in your first year, your target year, you can kind of play around with the numbers a little bit to say, hey, if I, it's 19% vacant right now. If I get down to 15 in the first year and 11 in the second year, here's my target when I want to sell it. This is what the value will be. So, a $938,000 property that I'm going into, I could potentially sell it 2 or 3 years down the road for 1.3. So even in some of the deals that may not look so good in the beginning, this allows you to just kind of plot it out for the next couple of years to see what it looks like. So without getting into the whole lot of numbers, just the basic ratios, once again, will help you and assist you to, without having to go into all those, to determine whether it's something to dig in a little bit further. Now, this is kind of my financial cheat sheet. Again, I C- math student at best, and so when I had my developers and my underwriters create this software, it was for myself originally. I wanted it to be idiot-proof, dummy-proof, Scott-proof, so that so that I couldn't really mess things up. And so that's what we've done. The software really does all of the calculations for me, so that I can see what my cash flow is on a property, and I can take that out into further years. I can see my cash-on-cash return, so I know exactly what that is. If I'm using 3 lenders on a deal, what? 3 lenders? Yeah, that's what it's taken to get deals done these days. If I have a primary lender, I have a private lender, or maybe a seller carryback that's included in here as well. I can add all of that in, and I can get a clear snapshot of exactly what that property is going to look like, what it's going to cash flow, and what the value is going to be when I buy it, as well as several years down the road. So without having a PhD, and without having an accounting or a finance degree, and without really understanding real estate math per se, the program here will help us out and allows us to make those decisions without a whole lot of fear. The beauty of the self-storage evaluator is that it allows you to dig into all of the expenses and the income based on a per square foot basis. And one of the sheets that we've found very useful that we've added to this that you won't find in any other software out there is the ability to add in all of the unit mix. I can look at how many 5x5s, the square footage of each and every one of those, as well as the rent, how many are occupied, how many are vacant, and then really, once again, drill down and get an exact picture and a snapshot of what the economic vacancy is and what the physical vacancy is in the facility, as well as matching that up with the gross potential rental income and total square foot of a facility. Okay, so in the short time that we have for the YouTube videos, let's not forget the market. When we're analyzing a self-storage facility, not only is it about the numbers and the physical aspects, but what about the market? Is the market going to support this facility going forward? What's the supply index? In other words, what is the amount of square footage per person in this market? Is it undersupplied? Is it oversupplied? Or is it at equilibrium? What is the quality of the competition? When I'm analyzing a facility and analyzing the market, who am I up against? Are there a lot of mom and pops that really aren't doing a good job that I can go in and outmarket and do a better job and taking some occupancy away from them and gaining new customers? Or am I against some formidable competition where I'm going to have a really tough time going against the folks in the market because they're extremely strong? And then also, what are the demographics and the demand in this particular market? Median income, military renters, student renters, are there a lot of business clients, a lot of apartments in the area, mobile home parks, small subdivisions without basements and small garages that have a demand for storage? What is the makeup of the market? And most importantly, once you analyze that, will it support this facility going forward, especially if you plan to add some additional square footage or add some buildings to it as well? So, real quick lesson here. Do you find yourself in this position when it comes to the self-storage industry or analyzing a self-storage facility, the proverbial fork in the road? Well, I challenge you to stop guessing at values. That'll only get you in trouble, and I've seen it happen over and over again, time and time again, from folks that they just take for granted what the seller or the broker have given them as numbers without really kind of digging in and start analyzing and really taking a professional approach to looking at and under the hood of your self-storage facility before you buy it. And then finally execute and get off the sidelines, confidently off the sidelines, for those of you who are sitting back who really are fearful of even getting in the game to begin with. So, in order to do that, we have the solution for you, a possible solution for you. We're going to go into this a little more detail. I've got a webinar that we're going to be holding Thursday, August the 30th at 9 p.m. Eastern, 6 p.m. Pacific, where we'll get into more of the numbers, talk about cap rates, talk more about the market, all factors involved in evaluating and analyzing a self-storage facility. So go log on right now to selfstorageanalysis.com/webinars. That's selfstorageanalysis.com/webinar, Thursday, August the 30th at 9 p.m. And for everybody that registers, I'm also going to be giving you as a gift the 12 mistakes that new investors make, but most importantly, how to avoid them. So that's step number 1. Step number 2, well, attend the webinar. And we'll show you how we analyze self-storage facilities, and we've gone over and analyzed hundreds. Our team and myself has analyzed hundreds of self-storage facilities and purchased countless self-storage facilities as well using the model that we're going to share on the webinar. So again, www.selfstorageanalysis.com/webinar, Thursday, August the 30th, 9 p.m. Eastern Time, 6 p.m. Pacific. So go register now, and I look forward to seeing you on the call.